Hey everybody, it's Jeffrey Dunyan with Safe Option Strategies. Happy Monday. I hope you're having a fantastic day or have had a fantastic day. The U.S. stock market was certainly up, and that's a good thing. All three indexes trading to the plus side. I believe the S&P 500 closed at an all-time high. Welcome officially to today's episode of Moving Markets Podcast. We got a lot to go over, especially about earnings plays that are coming up this week. Can't wait to talk about some of the earnings that are on tap for this week and what that means for your trading this week. Enjoy the rest of this presentation. Let's get on to the business of what happened today, why it happened today, what's coming up this week, what to expect, what to anticipate, and maybe to a small degree, how to prepare for it a little bit and be sort of ready. I think let's talk about what happened today. The Dow Jones Industrial Average had a good day today, finished 138 points to the upside, S&P 10.62. I believe that is, and you can see it right here, Dow rises more than 100 points to close above 38,000 for the very first time. So that is an all-time high close on the Dow, but I believe that's an all-time high close on the S&P as well. Both indexes were up farther than that during the day today. But the closes are historic highs and new all-time highs, and that's a good thing. If you like a bullish market, that's a fantastic thing. The Nasdaq was up a lot higher at the open of the market, but I'm gonna click on this Nasdaq, bring up the one-day intraday chart. The Nasdaq struggled after an initial really high opening to find footing and get back up towards those intraday highs. Really opened up high, dipped a little bit, came back up to its highest point. Then there was a pretty steep decline right around 10:30 Eastern time, and then it just never managed to get quite. Still had a decent day. It was still 1/3% to the upside. It's still a decent day, nothing to complain about. But there were a handful of stocks that dragged on the Nasdaq a little bit today. In spite of the fact that NVIDIA, sorry, blink it for a second. In spite of the fact that NVIDIA was up and had a pretty good day today, some other chip manufacturers didn't fare so well. AMD had kind of an ugly sell-off. There was a downgrade by someone on AMD today, and AMD is one of our favorite stocks of the year for 2024. They downgraded AMD to neutral. The analyst that did this was fearful that the hype about AI is bigger than what is actually going on with AI, or what the potential of AI is. Now, during the closing part of the day, AMD rebounded a little bit and didn't finish down nearly as low as it was at one point. I think at one point in time today, see if I can get you the exact numbers. At one point in time today, AMD was down to 164.15. It finished more than $3.50 higher than that at 167.95. That actually might be a aftermarket price. I think it finished at 168 and some change. Yeah, 168.18 is where it finished. It's down 22 cents in aftermarket hours. Not a big deal. I'm not too worried about AMD. I'm not too worried about the move down in today's trading. And I'm honestly, I never get too worked up about one random analyst and them making a call on a stock, because over 50% of analysts usually get it wrong. In fact, it's well over 50% of analysts that get it wrong. There are still some analysts out there that have a price target on AMD of over $350 a share by the end of this year. One outlier has it at over $400 a share. I'm not sure if it's going to get quite that high. AMD was up over 130% in the last year. But it's definitely a well-priced stock in the chip manufacturing sector and has a huge upside potential. I wouldn't worry too much about the sell-off today. I think as much as the downgrade that it got, it was a function of being strongly in overbought territory and needing a little bit of a correction. It wouldn't bother me if AMD came down a little bit more in the next couple of days. I wouldn't even be bothered if it came down and tested this recent support level at $150 a share, because I think that would make for if it holds that support level, and that's assuming it comes down there. I don't know if it will, but if it does and it holds, I would think 150 would be a phenomenal price to buy in at, whether it's with options and some kind of spread trade or long-term option trade, or whether it's actually buying the stock. AMD is, in spite of today's movement, one day is never going to dissuade me, and even a bearish correction for a little while would never
dissuade me. But it is one of my stocks of the year this year that I'm very big on. There were a couple of others that had a little bit of a drag on the NASDAQ today. I think besides AMD, Bookings.com was down $110 a share. That I believe Bookings is Priceline's company, but they're a $3,500 a share stock, so that's only a 3% move. Adobe took a little bit of a hit today. From a percentage standpoint, AMD, PayPal, Booking, Tesla, those are some of the NASDAQ stocks that kind of led that trend to the downside. But the NASDAQ still finished on a positive day because you had companies like, well, I don't know if this is worth much. CrowdStrike was a big one today. Walgreen Boots was a big mover today. Some others that are more familiar names that people follow, Veridesk, Airbnb had a good day today. So there were a lot more of the NASDAQ 100 that were up, obviously, than down, and that's why the index trended up. I don't know that there was a lot more moving the market other than this continued optimism about AI, about rate hikes, or excuse me, rate decreases, rate cuts this year. I think people are still getting a little bit too hung up and caught up on those things. I think you got to be a little bit cautious. There were a few people on the news this morning when the market was opening that were trying to give some credit to the bullish start that the market had this morning, to Ron DeSantis dropping out of the GOP primary. It's kind of a foregone conclusion that Donald Trump is going to be the nominee. Some people were trying to give credit to the idea that Donald Trump was going to be the next president, or hope that he would be the next president, as the reason the market was moving up. I heard one analyst on Fox Business News this morning say it's less about who's going to be the next president. It's more about certainty. The market doesn't like uncertainty. They like certainty. And when you have a major candidate drop out of one of the primaries and you start narrowing the field, there becomes a little bit more certainty. Now, there's still a lot of uncertainty as to who's going to win the general election in the fall. I do believe it's going to be Donald Trump versus someone from the Democratic Party. I don't believe it's going to be Joe Biden. That's just my opinion. I don't think he's going to make it. Physically and mentally, I don't think he's going to make it to the general election. I think the Democrats are going to be faced with a what I forget what they call it, but in the Democratic convention, I think they're going to have to caucus for someone other than Joe Biden, because every time I see the guy on TV, every time I see the guy in an interview, I'm just a little bit more concerned about whether physically and mentally he can make it to that point. If Kamala Harris ends up getting picked, it will be a Donald Trump landslide, because she is a complete disaster. And even the people in her party know that she is a complete disaster in overwhelming numbers. But again, maybe I'm wrong about Biden. Maybe he makes it to the finish line. Maybe the Democrats find someone else who they think has a better chance at beating Donald Trump. And this is assuming Donald Trump makes it. I think he will, but it's not a guarantee. He could absolutely lose one of these court cases against him. That could turn off enough independent voters. That could maybe change the minds of some people in the Republican Party. It'll be interesting to see. But I think it's going to be Donald Trump versus someone else. And when it gets narrowed down to one candidate on one side, the market likes that you are a step closer to certainty. So I would agree. I'm forgetting who to give credit to on this, and I feel bad about that. But I am agreeing that the market move up today had nothing to do with, or very little, if anything, to do with hope that Donald Trump becomes the next president, but it had more to do with a step closer towards some certainty, which the markets like and crave. There were not any big economic events on the calendar for today, but there's a big week coming up in economic events, and then we're gonna finish this podcast by talking a little bit about earnings. The biggest thing I think is going to go on this week is going to be GDP on Thursday and PCE on Friday. Now, this is the report that a lot of people point to and claim is the Fed's favorite report to look at for inflation numbers. If I'm going to go in reverse order. If PCE numbers come in hotter than expected, and they're already expected to be a little tick up from what they've been the last couple of months. Remember, inflation was going up like this, then the rate slowed down dramatically, almost to a crawl. It still hasn't gone in reverse, but it's slowed down dramatically, and then it's ticked up just ever so slightly. That's probably a little too steep of a line, but it has ticked up ever so slightly in the last couple of months. The expectation is that PCE will paint that same story, but if the numbers come in worse than expected, that has the potential on Friday to shake this market a little bit. No matter how good earnings reports are between now and then, no matter what numbers we get on the GDP, that a bad PCE report, meaning higher than expected numbers, could really shake this market. So whatever you're trading short term, I'm going to tell you right now, if it's not a very non-directional trade, like the new trade that we opened or that we are planning on opening tomorrow, like the trades that we opened the last couple of weeks, if you don't have a very non-directional trade where you don't have to worry about and care whether you get a big move to the upside or a big move to the downside, you can profit either direction, then you're absolutely fine. If you're trading something short-term directional, I think you have to consider being out before that Friday morning report. The other big report is the GDP numbers that will be released for fourth quarter on Thursday. I don't expect any surprises here. I think the analyst consensus on GDP is going to be a little bit better number than what some people are hoping that this will be a negative number because they want to see us go into or get very close to a recession. Now, I don't want to see a recession, but I think it's a possibility looming for this year. But I don't think we're going to get anywhere near the unexpectedly large number that we had last month. I think 2% is probably close to what we're going to come in at. But like with any other economic report and its effect on the markets and impact on the markets, a number that is a really big hit or a really big miss, just a major win or a major miss from the consensus number has the ability to affect the markets a little bit. I don't think as many people pay attention to GDP outside of the talking heads that are on the news channels, but it can't be ignored. A really, really low number, a negative GDP number. Well, look, last month when we hit 4.9, I believe the consensus estimate was something in the neighborhood of 2% or maybe 2.5%. And that's a miss of almost 2.5. If we had a miss to the downside that was that big and this number came in at 0.05 negative instead of 2% up, and that would be a similar type of a miss as what we had. Now, last month, the miss was to the upside. If the miss to the downside was a similar percentage or similar distance, a negative GDP number, even though it would be barely negative, that's the one thing that could really rock the markets. I do not expect that on Thursday. I'm not predicting that. If anything, I think the number will come in somewhere between, I think it'll be 2 to 2.5. I don't even think it'll be below the consensus. I think it'll be at or above the consensus, but not nearly as much as last month was. All right, last but not least today, we've got to talk about our earnings calendar and what we have coming up this week. To me, earnings officially started about a week and a half ago when the big banks reported. A couple of them reported a week and a half ago, a week plus a weekend ago on Friday, and then a few more reported on Monday and Tuesday. We had the big banks like JP Morgan, Goldman Sachs, Morgan Stanley. You had Bank of America, Citi. I'm missing some important ones. Wells Fargo, they were all in there. US Bank. You had a lot of those big banks and even a lot of the smaller regional banks reported their earnings last week and the Friday prior. This week, we start to get into a lot of technology companies. The two that are probably at the very top of the list, but certainly not the only ones, are going to be Tesla and Netflix. They both report this week. Netflix reports Tomorrow after the market closes, so on Wednesday morning when the market opens, we're going to see whether or not Netflix has some impressive numbers and can wow the market. Tesla, I believe, is on Thursday, or I'm sorry, Wednesday. Wednesday after the market closes is when Tesla reports. I think you might not see this really well on your screen, but on it's next week that Microsoft reports. It's next week that AMD reports. Apple reports the week after that. Amazon the week after that. NVIDIA into the month of February. Meta reports on February 1st. SoFi on January 29th, et cetera, et cetera, et cetera. So there's a lot going on this week, a lot going on next week, and a lot more going on the week after that. But this week, the focus, I believe, is going to be on Netflix tomorrow night and Tesla the night after that. Netflix has a little bit of pressure on them. The report I heard on Netflix this morning was that their revenue per user has gone up dramatically with their crackdown on password sharing, but that they may have lost some users or not added as many users. I can't remember which it was, not added nearly as many users as the expectation was going to be. So you could get some mixed numbers from Netflix, but they could always surprise with not as much of a revenue increase per user as what's being touted right now, or maybe they do or don't add users in the numbers that were touted right now. Tesla's a little bit of a different story because when Tesla reports, people are going to automatically listen for and look at and think about information as it relates to X, formerly known as Twitter. X is now a private company and has not gone public again. And Elon Musk has lost a lot of money on X. He may be steadying it now, and it may be close to a turnaround that could become profitable again, but it hasn't so far. You could possibly see some really good numbers on Tesla and not see, anything that would wow investors and get them to buy and get them to move more money into Tesla. Tesla has been really beat up on over the past month. Since the first of the year, Tesla took a pretty good size hit back in October, rode the rally with the rest of the market through November and most of December, and then has been almost like off a cliff and straight downhill. But Tesla is also coming up to a pretty strong level of support at somewhere between maybe 195 and 205. And Tesla could surprise with some really good numbers. In spite of the overall EV market in the country suffering a little bit, you've heard about Ford and GM making some corrections in their EV production, maybe taking some money out of EV production and putting it in other things that are more profitable for them. Both companies have been losing a lot of money on their electric vehicle manufacturing and design and production. And then you've got smaller, lesser known EV companies that I think many are going to go bankrupt because over this past year, almost everyone who has been paying attention and not had their head buried in the sand has recognized that as a country, we are not ready for the big shift into EV like the government would want us to do. And I should say like the Democratic Party would want us to do. The Democratic Party and their Green New Agenda think that we should all be driving electric vehicles and that we should get rid of every gasoline combustion or diesel combustion engine that exists in the world. And it's simply a pipe dream. It's actually laughable and ridiculous that we are anywhere near ready to do that. People who buy, I've got a good friend who bought an EV, and he bought it with exactly the right perspective, the right expectation. He was not expecting to have a vehicle that he would take on long road trips. He was not expecting to have a vehicle that he could use without the ability, or well, he could use it, but use as effectively without the ability to charge it at home. He told me he spends about $50 a month to charge it at home and rarely, if ever, has to charge it anywhere else, but he mostly uses it in and around the city and he loves it. And I've been in the car. It's a great car. It's a Tesla Model S. It is a great car. I love the technology in Teslas. I love the technology in other EVs. My wife and I were in San Francisco over the Thanksgiving week, and we rented through one of the rental agencies there a Volvo. I believe it was a C40 or X40. Forgive me, I'm not real people familiar with Volvo. It was an all-electric vehicle. It was a delight to drive. It was an absolute pain in the butt to charge and to keep charge. The infrastructure for that type of thing, if you don't have the ability to charge at home, or if you want to use it for longer commutes or longer road trips, the infrastructure and the technology is just not there for EV. But in spite of all of that, Tesla is clearly and without exception, and there's no room for debate on this, they are so far out ahead of the rest of the EV market that they have the ability to still post some impressive numbers, and you could see Tesla rebound and go back to the upside. I don't think Tesla is a company that you should not be invested in at this time. I think you got to be careful getting into Tesla. I think Tesla is a trader's pick, not a long-term investor's pick. Tesla is not a company that I would buy a lot of shares of and simply hold in my portfolio right now. Tesla is a company that I would use option strategies to play off of levels of resistance, off of levels of support, major trend changes when all technical indicators are pointing one direction, very short-term trades that have a safety net, some type of a spread trade that can be adjusted and really have that strong safety net. I'm excited to see what Tesla does. I do own some shares of Tesla, but I have them very tightly collar trade. I would not own shares of Tesla without having a collar around it, and I would not pick Tesla for a long-term investment that was not a collar trade strategy or some type of a short-term option strategy. So earnings is going to be big this week. There are a lot of other companies. There are not a lot of companies that are on my watch list. If you went to the calendar and you just started clicking through United reports, or I guess they reported just recently after the market closed today. Tomorrow morning, you got Verizon, 3M, GE, Procter & Gamble, Johnson & Johnson, Halliburton. I don't personally trade any of those companies, but those are all potential market movers. Tuesday afternoon, Netflix, Intuitive Surgical, Texas Instrument. Wednesday morning, AT&T, Abbott are probably the two biggest ones that I'm looking at on Wednesday morning. Wednesday afternoon, we already talked about Tesla. We also have IBM that you have to look at there as well. Thursday, American Airlines, Humana, Alaska Airlines, Southwest, Blackstone, all big companies, all potential market movers. And then on Thursday afternoon, Intel and Visa are leading the way. Not to leave anybody out. On Friday morning, American Express is the one really big one that I would be paying attention to for Friday morning. And then next week, we'll get into a whole slew of additional ones. So lots to think about, lots to look at this week. Be cautious going into the end of this week as it relates to how you're positioned on shorter term trades because of those two big economic reports that have the ability, especially the PCE on Friday morning, to really shake the markets and really have the potential to move things, hopefully in the direction you want.